Hey, what's up, everybody? Tuesday, September 24th. Stock market was down today, and that should be no surprise. The Fed's activities now with this repo stuff and these 14-day system repos, 90 billion this week, 75 billion ongoing, Monday through Thursday, all the way through October 10th. These are very destabilizing actions being taken by the Fed. You're now getting this huge reserve dump into the banking system. And as I've explained many times in the past, when that happens, banks have to adjust. They make adjustments to their assets. It could slow the growth of loan creation. It definitely affects risk assets in a negative fashion, and so we are seeing the stock market sell off. Now, going back to what I said yesterday, we saw in the month of September, the beginning of the month of September, and a significant drop in reserve balances in the system. And that was as a result, I believe anyway, and I've given you the explanation for this. I talked about it in my last video. That was the result of gross mismanagement by the Treasury after the debt ceiling got suspended. I'm not going to go all through that again, but basically the Treasury spent the whole month of August really doing nothing at all. And then in September, you had that double whammy effect of a very rapid ramping up of bond sales coupled with September quarterly tax payments, corporate tax payments, and you had a really fast and large decline in reserve balances, and basically it caused the system to default, to get short, to be short of reserves. The Fed had to step in. You had that spike in the overnight rate, way above where the Fed funds rate was. The Fed had to step in. Now this ongoing every single day now, 75 billion, 90 billion 14-day term repos, all this stuff all the way out until October. What happens? I mean, on the one hand, they did nothing, and now the reaction is, again, the opposite extreme. They're pumping in all these reserves, and it is just a completely destabilizing effect. Now, we will get through this. I'm telling you right now. Ultimately, you could break this whole thing down into these short-term disruptions based on bad monetary policy, bad Treasury management. And by the way, what about the TBAC committee, the Treasury Borrowing something committee, right? All these geniuses on this committee who are supposed to advise the Treasury when it comes to bond sales and sales of securities and whatnot. I mean, where were these guys in the month of August? All these geniuses from Wall Street who are, who are convened to give advice to the Treasury on how to do this stuff. I mean, they were obviously nowhere to be seen. Again, the very smart people of Wall Street. You see them in action. How did that work out? So all this really has been a result of mismanagement, and again, the Fed overreacting. Powell, here we go again. You can go all the way back to late last year, November, December. The guy panicked on the market correction. Then they said they were going to stop raising rates in January. Then they raised rates and they cut rates in March. Then they cut rates in July, or what? They cut rates, no, I'm sorry, in September. And they said in July they were going to stop reducing their balance sheet when they had said prior to that it was going to be at the beginning of October. So lots of mismanagement, lots of unnecessary volatility and uncertainty injected into the markets. Now this period that we're in right now, it's going to last until a certain date. Now, I have that date. I know exactly when the buy window comes in. And by the way, and I think I mentioned this a number of times, I said, and for those of you who signed up for my MMT Trader report, I said way back that September 26th, all right, that would be the reserve trough, and we would start to see the markets coming down. So that is now happening. Now, how long this lasts, you got to go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. A buy window for the market will emerge at a certain date, and I have that date. But right now, what is going on, number one, the market correction would have happened in any case because of these reserve flows that I have been talking about this stuff now for the better part of this year, even prior to this year. And these cycles, I mean, they're very predictable. You know this just from the normal monthly cycles of government spending, when spending flows out into the financial system, and then when it comes back in the form of tax collections. You know, you have these ebbs and flows, and they're completely tradable. I said that if you want something short term, which is basically like having inside information, you have to understand how these reserve flows affect the markets. And there's a very, very important effect on the market short term. Longer term, if you want to break it down and if you want to have a sort of a bigger picture macro perspective, you still have extremely strong fiscal support for the economy. Now, what happens when you have these market disruptions like this, it affects sentiment. You know, we still see sentiment very negative. We see a low level of bullish sentiment. We see a very high level of neutral sentiment. In the last week, I'm talking last week, some of the bearish sentiment came down. But I suspect now when we see the new readings this week, we will see that bearish sentiment has built back up again. But the important thing, I think, is that we've had very low levels of bullish sentiment for a long time. Now, even with this correction today, and it will be ongoing now for a certain period of time. And again, if you want to know what that period is, you got to go to my website and sign up for a 30-day free trial of MMT Trader. But for a long period of time, we've had very low levels of bullish sentiment. And what I was going to say was, even with this correction today, we are still, you know, within 1% or 2% of all-time record highs in the stock market. So the longer term picture, given the strong fiscal, is that the stock market is going to rise. It's going to go up. And the economy is going to be okay. And like I said yesterday, and like I have been saying for a long time, all the recession fears are, you know, kind of fading away right now. And I said this many times, that if we do go into a recession, then I am open to all the criticism that you want to throw at me. But all during the last months, when everybody was screaming recession because of the inverted yield curve and this and that and every other reason in the world and the trade war and all this other stuff, I said there is not going to be a recession. And I know this. It's not a guess. This is based on information. All right? Now, I have information daily. Nobody else has that. I mean, you can have that if you understood where to go and how to kind of extract that information. It's all free, it's all out there, it's all public, but you have to know how to get it and how to understand that. And probably the best way to start to learn that, if you just want to, you know, have an understanding and some knowledge about that, is to buy my course, Understanding the Daily Treasury Statement. But I break it down for the subscribers every single day, and we see the numbers. That's how come I'm able to say, hey, the deficit's over $1 trillion, and then a week or two later you'll see that in the news. And by the way, the deficit is now back below $1 trillion, and you might see that in the news, but usually they won't publish something like that because it's not sensational enough. They'll publish the trillion because that's a sensational headline, but they're not going to publish the fact that it came down. But it's going to go back up again. So anyway, that's the story for today. If you want to get the scoop on when the next buy opportunity is, you got to go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye-bye.